Alright folks, let's talk about money. Specifically, the Canadian dollar, also known as the loonie. Because, Canadians love their loons. And right now, the loonie is taking a bit of a beating against the US dollar. What does that mean? Well, it means your American buck goes further in Canada. Great news if you're planning a trip to see Niagara Falls. Not so great if you're Canadian and, like buying things. But why is this happening? Why is the Canadian dollar weaker than the US dollar? Well, hold on to your toques, my friends, because we're about to dive into the wild world of currency exchange rates. Buckle up. It's like a popularity contest, but instead of high school cliques, we're talking about currencies. And right now, the US dollar is the prom king, while the Canadian dollar is, well, let's just say it's sitting at the nerd table. Remember that election Canada had recently? Yeah, well, it didn't exactly go according to plan. They ended up with what's called a hung parliament, which basically means no one got a clear majority. It's like ordering a pizza with your friends and no one can agree on the toppings. Chaos. And when investors see chaos, they get nervous. They like stability, predictability. A hung parliament means uncertainty about future economic policies, and that makes investors hesitant to put their money in Canada. It's like going on a date with someone who changes their mind about everything. Not exactly reassuring, right? To make matters worse, the minority government is struggling to pass important laws. It's like trying to build a house of cards in a windstorm, not exactly a recipe for economic confidence. Now let's talk about interest rates. Think of it like a game of tug-of-war between the Bank of Canada, BOC, and the US Federal Reserve, the Fed. The BOC is like that friend who's always trying to be the life of the party, even if it means doing something a little crazy, like cutting interest rates. They're hoping to stimulate the economy, get things moving. The problem is, the Fed, the more cautious friend, is not playing along. This difference in interest rates makes the US dollar more attractive to investors. They're like, hey, I can get a better return on my investment in the US, and who can blame them? Money talks, folks. Remember how we said the BOC is cutting interest rates to stimulate the economy? Well, that's because the Canadian economy is going through a bit of a rough patch. It's like that feeling you get when you realize you ate the whole pizza by yourself. Not good. Canada's economic growth is slower compared to other countries, including the US. It's like being stuck in the slow lane while everyone else is speeding past you. And to make matters worse, people in Canada are spending less money. It's like they're suddenly on a budget after that pizza binge. This lack of spending is putting downward pressure on prices. Which sounds good, right? Well, not really. It's a sign of weak demand, which is never a good thing for an economy. Let's move on to trade relations between Canada and the US. Remember those two? They're like siblings who love to fight even though they share a backyard. There's been a lot of tension lately, with disputes over tariffs and trade agreements. It's like they're playing a never-ending game of Monopoly and no one can agree on who gets boardwalk. All this uncertainty is bad for business. Companies don't know what to expect, so they're less likely to invest. And when investment dries up, so does economic growth. It's a vicious cycle, folks. Section 6, Black, Gold, Blues, Oil Prices, and the Canadian Dollar. Now, let's talk about oil. Canada is a major oil exporter, which means they make a lot of money selling oil to other countries. Think of it like Canada's side hustle. But here's the thing. Oil prices have been declining lately. It's like finding out your side hustle just got a major pay cut. Not ideal. When oil prices go down, Canada's income takes a hit. And when your income takes a hit, you have less money to spend. It's basic economics, folks, and it's bad news for the Canadian dollar. Section 7, the almighty greenback, safe haven in uncertain times. Meanwhile, the US dollar is doing pretty well for itself. It's like the popular kid in school who everyone wants to be friends with, even when they're being a jerk. Why? Because the US dollar is seen as a safe haven currency. When there's uncertainty in the world like, a global pandemic or a trade war, investors flock to the US dollar. It's like the bunker people build when they're preparing for the apocalypse. This demand for US dollars drives up its value, making it stronger against other currencies like the poor Canadian dollar. It's like the law of supply and demand in action, folks. Section 8, Connecting the Dots. It's all related, folks. So there you have it. The Canadian dollar is struggling against the US dollar because of a whole bunch of factors: political instability, interest rate differences, economic weakness, trade trade tensions, oil prices, and the safe haven status of the US dollar. It's like a perfect storm of economic woes, all hitting the Canadian dollar at the same time. The thing to remember is that all these factors are interconnected. They influence each other, creating a complex web of economic cause and effect. It's enough to make your head spin. Section 9. What's next for the loonie? Crystal ball time. So, what's next for the Canadian dollar? Will it sink or swim? Well, I'm not an economic psychic, but I can tell you this. The future of the loonie depends on a lot of factors, many of which are outside of Canada's control. Will the Canadian government get its act together and restore investor confidence? Will the global economy stabilize? Will oil prices rebound? These are the million-dollar questions, folks. One thing's for sure, it's gonna be a bumpy ride. So buckle up, hold on to your toques, and stay tuned.